But there's a lot to talk about, including the latest retail sales data and that Fed decision tomorrow. So joining me now with more in studio is Carin, Head of Portfolio Management at Fiduciary Trust International. Carin, welcome.
Thank you.
It's great to have you on the show this morning, and a lot certainly for our viewers to digest here right at the open. What's most important to you?
Well, obviously today's news on the Fed is important, and the Fed has always been a significant driver of market moves. But I think that today's event probably won't be much of an event. I think that the Fed will likely just stay pat. I think the other driver of the markets is obviously what you just mentioned in terms of the geopolitical risks. For me, the markets really are going to come down to valuations. And so I do think that the markets are going to be range bound for the next few months and maybe for the remainder of the year. And, we are currently trading at the high end of the range right now. I think that, investors need to be patient here, not chase the market, and wait for better buying opportunities.
Got it. So that Fed decision, of course, coming tomorrow, 2 p.m. Eastern, two-day meeting does kick off today. What could lead to a buying opportunity down the road, Carin?
I think that we could see potentially more concern about if the war, for example, lasts a lot longer, if we see the potential of a spike in oil prices, which right now doesn't appear to be the case, but I think that that could potentially alarm investors some more. I think if the conflict just lasts longer, that might weigh on investor sentiment. But I think from a fundamental standpoint, the economy probably looks to continue to weaken a little bit. Even though it's been very resilient so far, we do expect that we're going to start to see weaker labor data, and we're going to see potentially the impact of tariffs on company margins. Not necessarily this quarter. We certainly, in the first quarter saw a lot of companies weather tariffs or not even seeing the impact. But I think that's to come. And so, you're not going to have as much of a cushion by way of tariffs as we move to a slower economy.
Yeah, we did get the retail sales data out this morning. It did show a decline in sales by 0.9% in May, and in fact, April was revised lower to a fractional drop as well. You mentioned the labor data being sort of the most important here. Any clues that you think the Fed could hint at its decision and press conference tomorrow that could give us a better sense as to how this labor market might be shaping up going forward?
Sure. I think that is key for the Fed, right? Because that is part of their mandate, is to really manage the economy in terms of the labor market. And so, I think we have seen some negative impact in terms of artificial intelligence and how companies are using that as a way to cut costs, right? They're using AI and they're probably slowing down their hiring. So we could see unemployment claims tick up, and that would be a data point that the Fed's going to be monitoring very carefully.
Yeah, so you mentioned better opportunities down the road, but from a thematic standpoint and any particular areas of opportunity, what more can you share there?
So besides the AI theme, which we continue to believe in long term,
yes,
I just think that valuations right now are tricky, and I would use more patience with respect to buying on dips in those stocks. Which I do think that we're going to probably see some, market volatility ahead of us to give us better buying entry points. The other theme that I would stress is dividend-paying, dividend growth stocks. I think in an environment where the economy is uncertain, where policy is uncertain, investors would benefit from having something that is a little bit more reliable, more stable in terms of income-producing securities.
Yeah. And in terms of the central banks around the world, the U.S. has been a lagger in terms of cutting rates. What does it mean for international equities that other central banks, like those in Europe and the U.K., have been more aggressive on that front?
Yeah, so to that point, I think that the international markets have benefited from easing of central bank policy and interest rates. Those markets have done very well this year to date and have actually outperformed the U.S., but a lot of that is valuation catch-up. And I think that we're going to need to see continuing evidence that the economies in Europe are growing faster than the US for that outperformance to continue. I think that profitability, corporate profitability, is also another way to look at the performance of international markets, whether it's going to be sustainable. And I would say, and I would argue that, lower interest rates mean that those economies need stimulus. And we do expect that the U.S. economy, as it slows down, the U.S. will also be looking to lower interest rates ahead, right? And so perhaps we're gonna see actually some of that shift in terms of sentiment for the U.S. markets to improve.
All right, Carin Pei joining me in studio. She's the head of portfolio management at Fiduciary Trust International. Carin, thank you.
Thank you so much, Chris.